Hello students, welcome back to Accounting 1303, Introduction to Accounting 1. I am Dr. Mercado. I want to welcome you back. In today's lecture, we are going to be covering content from Chapter 10, which deals with accounting for sales and cash receipts. The specific problem I have selected to go over with you is Exercise 10.5a. Now, I do want to remind students to please ensure to read the entire chapter before beginning working on your assignments. Okay. Now, a lot of the exercises or your homework problems have a show me how video. There are some of them that do not have a show me how video, but that contain information that has already been covered in prior problems. So you just have to apply it to it. The textbook also does a wonderful job in providing you with examples and visuals on how to complete your journals, your ledgers, your subsidiary ledgers, anything that you have to complete. Okay. You just need to refer back to the specific section on your ebook for guidance. Okay, so the specific problem that we're going to cover today is exercise 10.5a, and I have selected this problem because it has a little bit of everything. Okay, in this problem, we're going to be journalizing sales, sales returns and allowances, and cash receipts. So it's a good combination of three different types of journal entries that we're going to be exposed to in this chapter. So that is why I have made this selection. Now, the problem deals with three different types of transactions. What I like to do is when I'm working a specific problem is locate the area of the ebook that covers this specific sections. Okay, so I've gathered some of the information, not all of it, from your ebook. Now, all of this is in your ebook, and like I said, the ebook does a wonderful job at explaining everything to you. Now, we are dealing with sales of merchandise. Okay, when we account for merchandise sales transactions, there's 5 accounts that we utilize. Okay, sales we've already been using. Okay, so that's not so much new, but we are incorporating our sales tax payable, our sales returns and allowances, our customer refunds payable, and our sales discounts. Now, we need to be familiar with the normal balances of these accounts. Now, figure 10-7, which is labeled accounting for merchandise sales transaction, puts those accounts into the specific accounting equation. So, for example, sales tax payable is a liability account with a normal balance of a credit. Okay, customer refunds payable has a normal balance of a credit. Both of these are payable accounts, they're liabilities. Okay, we also have sales. Sales is a revenue account with a normal balance of a credit. Okay, we've got sales returns and allowances and sales discounts. These are contra revenue accounts. These have a normal balance of a debit. So whenever you're doing journal entries for these types of transactions, I would have this handy so that way you know whether you need to debit or credit an account. Okay, if the liability is decreasing, you debit. If the liability is increasing, you credit. For the revenues, if your revenues are increasing, you credit. If your revenues are decreasing, you debit. The same thing for these down here. Okay, so you just follow the equation. Okay, so this figure 10.7 is instrumental when you're doing these journal entries. So I encourage that you print it out or that you have it handy with you as you're doing your journal entries. Okay. Now, there's 3 different types of accounts that we're going to be working on in this particular problem. The first are sales accounts. Okay, so a merchandising business uses the sale account for the revenue account to record sales of merchandise. Anytime you make a sale, you have to record it under the sales account. Okay, the account is credited for the selling price of the merchandise sold during the period. This could be in the form of cash, credit card, or accounts receivable, which means that they're going to pay you at a later point in time. So whenever you have a sales entry, you're going to credit your sales account. Okay, you credit your sales account and you debit the specific account, whether you received cash for the sale or it's going to be a receivable if someone is going to if they owe you the money and they're going to pay you at a later point in time. Okay. The second area that we're going to be discussing is sales returns and allowances. Okay, sales returns and allowances is a contra revenue account, which means it has the opposite effect of a sales account. Okay, so if we see here on figure 10.7, sales returns and allowances has a normal balance of a debit. So when you have a sales returns and allowance, the normal balance is a debit. Okay, sales returns and sales allowances are debited on this account. Now, this account is reported as a deduction from the sales on the income statement, okay? So here they show you an example of an income statement. We had sales for the period of $38,500. We had sales returns and allowances of $200, which means those sales were returned, okay? So that means our net sales, what we actually got from our sales for this period, is the difference between the two of $38,300. Okay. For the sales returns and allowances, we are going to be debiting the account to enter any returns and allowances. Okay. We also have in the problem cash receipts. Like sales transactions, cash receipt transactions occur frequently in most businesses. There are three types of cash receipts. This is when we get paid. These are from the collection of something that's been purchased on account, cash sales, or bank credit card sales. And we're going to be talking about those as well. Now, this is just abstract of the chapter. Please make sure that you go and you read the chapter in its entirety before you begin working on your assignments. Now let's start applying a little bit of what we've learned to the problem, okay? So we are being asked to prepare the journal entries for the following transactions, and the transactions deal with sales, sales returns and allowances, and cash receipts. So if I were a student, what I would do is I would have this figure 10.7 with me handy, okay? So we can know if we need to debit or credit an account, okay? Let me see if I can copy it over here so we can have it. Yes, here we go. That way we have it available here in this as we're working out the problem. Okay. Okay, that makes more sense. Okay, so let's begin. We're going to begin with the August 4th date. It says that you sold merchandise on account to S. Martin for $320 plus a sales tax of 4% with a 210 net 30 cash discount terms. So what are we going to do with the discount information at this point in time? Okay. What are we going to do? Well, we're not going to do anything at this point in time because that happens, that information is used when a payment is made. Okay. All we're doing right now is recording the sale. So we made a sale on account to S. Martin for $320 plus tax. Okay. So that means that I'm going to put here August the 4th, that we need to set up a receivable because Martin purchased this on account. So Martin owes us money. So I'm going to have to set up an accounts receivable, okay, for S. Martin. And we have to label who owes me the money because once we do our subsidiary ledgers, we need to identify who owes me money. So we're going to put the name there of S. Martin, okay. Now the total amount that S. Martin owes me is unknown at this point in time, but I do know that I'm going to be debiting the accounts receivable account. Now, let's work backwards. What happened here? Well, we made a sale, okay? So we have a sale. Whenever we have a sale, if we look at figure 10.7, we're going to be crediting the sales account, okay? Now we're going to ask ourselves, okay, I made a sale, how much? The problem says that you made a sale on account for $320. Okay, that is the actual amount of the merchandise that was sold. So I'm going to go ahead and I'm going to credit $320 for my sales. It also says that we have to pay sales tax on it. The sales tax is 4%. Okay, so if we look at our sales tax account, that is money that we collect from the customer. We keep it in our payable account, and at every month, every quarter, depending on the frequency of payment, we have to remit that money to our state for the taxes, okay? So I'm going to go ahead and I'm going to do an entry, and if you look at your sales tax payable, it's a normal balance of a credit. So the money that I'm going to collect from the sale for taxes is going to go into my sales tax payable. Now that has a normal balance of a credit. Now, how much taxes am I going to collect from this transaction? Well, we purchased $320. That's the sales amount. My sales tax rate is given at 4%. So that means that I have to collect $12.80 in taxes. Okay? So I've got to collect $12.80 of taxes. So then how much does Martin owe me? Well, Martin owes me $320 for the merchandise and $12.80 for the taxes. So the total amount that Martin owes me is $332.80. That is going to be accounts receivable. Remember, it's an asset account with a normal balance of a debit. So the total that Martin owes me is $332.80. Okay. Remember, when you're doing your entries, the debits must always equal the credits. Okay. And here I'm just going to do an entry, a description. We made a credit sale. Okay. We made a sale, but it's on credit. So I need to collect that money in the future from S. Martin. Okay. So that happened on August the 4th. Okay. On August the 6th, okay, let's see what happened. We sold merchandise on account, this time to K. Kennedy, for $210 plus sales tax of 4%. Now, we see here to Kennedy, we didn't offer any discounts. Okay. For Martin, it says here that if they pay within 10 days, they'll get a 2% discount. If not, the balance is due within 30 days. That is what the 210 net 30 means. The first number means the discount that you're going to get if you pay within 10 days. Okay. If you don't pay within 10 days, then you don't get any discounts, but you still have to pay the balance within 30 days. Okay. Now, Martin was offered a discount of 2%. Kennedy was not offered anything. So that means that they're just going to have to pay in the regular 30-day timeline that usually everybody is due. Okay. So, we sold merchandise on account to Kennedy. This is going to be very similar. We're going to set up an accounts receivable. Okay. But this time I'm going to label it K. Kennedy. Okay. Because we need to keep track by person or by company who owes us money. Now, I don't know the amount yet. We're going to work on that backwards like we did on the first one. The first thing I'm going to do is figure out how much did I sell merchandise for to Kennedy. The problem says we sold $210 of merchandise. Okay. It says we have to collect the $210 plus sales tax of 4%. So I have to collect as well my sales tax, and I'm going to put that into my sales tax payable. Okay. So we get our magical calculators out. $210 times 4%. That gives me $8.40 of taxes. Okay. So, at the end of the day, when Kennedy pays me, Kennedy is going to pay me the $210 for the merchandise plus $8.40 for the sales tax. So, I am going to collect from Kennedy $218.40. Okay. So, that happened on the 6th. And we also made a credit sale. So, I'm just going to copy and paste it here. Okay. So that happened on August the 6th. Okay. Now let's see what happened on August the 10th. Okay. On August the 10th, S. Martin returned merchandise purchased on August the 4th. So we have to go back to what happened on August the 4th. On August the 4th, Martin purchased $320 of merchandise. On August the 10th, they made a return for $20 plus the sales tax for credit. Okay. So Martin has not paid the merchandise yet, but he has made a return of some merchandise that he didn't need or want. Okay. So this is a return that is happening. Okay. So the first thing that we're going to do is we're going to go ahead and this is a return, so we're dealing with sales returns and allowances, okay? So we're going to be looking at our figure 10.7. Sales returns and allowances is a contra revenue account with a normal balance of a debit. So I'm going to go ahead and I'm going to start off with a debit of my sales returns and allowances, okay? Now the amount of the return is $20, okay? That is the actual amount of the merchandise, okay? Let me put all of this with commas. There we go. Okay. So my return is $20. Now it says that the return merchandise was purchased for $20 plus the taxes. When we process the return, we also have to process the refund for the taxes. Okay. So when we collect taxes, okay, let's look at our sales tax payable. When we collect taxes, we credit it. Okay. When we make a refund of those taxes or when we pay our taxes, then we debit our sales tax payable account. So here we're going to go ahead and we're going to debit our sales tax payable for the amount of the taxes. So we're making a return of $20. The taxes is 4%. So that means I'm going to return 80 cents of taxes. Okay, that's going to be a debit of 80 cents. Okay, now what I'm going to do is, if we recall, for Martin purchased on account. So what we're going to do is we're going to adjust the receivable. That way Martin will no longer owe me the full amount of $332.80. We'll deduct the return from the balance that is owed. Okay, so I'm going to go ahead and I'm going to offset it against my accounts receivable for S. Martin. Okay, so I'm going to give the money back. I'm going to go ahead and reduce the amount that is owed by Martin for the total of $20.80. Okay, so if we look over here at our receivable, okay, Martin used to owe me $332.80. Okay, now they made a return. That means that they owe me $20.80 less. So if Martin had to pay me, Martin will only have to pay me $312 at this point in time. Okay, so the return is being offset against the receivable because at this point in time, Martin has not paid us yet. Okay, so that happened on the 10th. Okay, let's look at the 13th. Okay, now let me put a description on this one before we move on. On the 10th, we had returned merchandise. Okay, so let's look at August the 13th. On August the 13th, Martin paid the balance due on her account. So now we have to figure out how much Martin owes us. Okay, so we've already done the work, in the prior exercise. Okay, so we know that Martin, initially, we're looking at anything that has Martin on it. Okay, so let's look at that one and let's look at our accounts receivable for Martin. That is what Martin owes me. So we've got a debit of $332.80 minus a credit of $20.80. Martin owes me $312. Okay, that is the amount that we need to clear the receivable for. Now, we have a debit balance and a credit of $20.80. Right now, my balance on my accounts receivable is $312 debit. If I want to clear my $312 debit, I need to credit it for $312. So let's go ahead and let's start off with the credit. Okay, so I know that my accounts receivable for S. Martin will be credited for $312. Okay, how do we do that? How do we get that? Well, we got the debit of $332.80 minus the return. We had a credit of $20.80. That means as of today, Martin owes me $312. That is the amount sitting on the receivable. That is what I'm going to clear for Martin. That way, as of August the 13th, Martin will no longer owe me anything. Now, we need to look at the August 4th entry. It says here that if you pay within 10 days, you get a 2% discount. Now, Martin purchased the items on August the 4th. Martin paid the balance on the 13th. That is less than the 10-day mark. So that means that we're going to get a 2% discount. Okay, so we're going to go ahead and we're going to get the $312 times a 2% discount. Okay, that is, let me see. Accounts receivable is $312. Okay, let's see. Is it, yeah, 2% discount? Okay, so let's see what we get here. We get $312 times 2%, and we get a discount of $6.24. Okay, let me see what's not jiving here. Okay, so okay, remember that we had a return, correct? So we had a return on the 10th. Okay, so we have the sale of $320 minus we had a return of $20. So in reality, our sales amount is $300, okay? The accounts receivable includes your taxes. We don't want to include taxes on the discount. The only thing that gets the discount is the sales amount. So let's repeat what we did, okay? On the 4th, Martin purchased $320 of merchandise. On the 10th, they returned $20. So the amount of the sales is $300. From that $300, we're going to get the 2% discount, okay? So that means we're going to get a discount of $6. The discount only applies to the sales, not to the taxes, okay? So we have a discount. Now sales discounts we see down here on figure 10.7. That is a normal balance of a debit. So I'm going to go ahead and I'm going to debit my sales discount, okay? For the amount of this discount that we calculated, which was $6. So it was the $300 net sales. That's the amount of your sales of $320 less your discounts times your 2% gives you the $6, okay? So we've got a discount of $6. So now we do the math, okay? Martin owed me $312. That includes the sales and the taxes, okay? So we have $312 that Martin owes me for everything combined, okay? Martin got a discount on the merchandise only of $6 for paying within the 10-day period, okay? So that means that the amount of cash that we received from Martin is $306, okay? Remember, debits must equal credits. So the cash that Martin is going to pay me is $306. He's getting a discount of $6, and that will clear the total balance that he owes me of $312, okay? So we always have to refer back to the prior transactions. Martin made a purchase, then made a return. Therefore, the discount is calculated on the net of the sales amount, not the receivable. So when you calculate your discount, it's based on the $320 and the $20 discount, okay? That gives me $300. You multiply the $300 times the 2%, and that gives you the $6 discount, okay? So on the 13th, we received cash on account. So basically, Martin paid off the balance due. At this point in time, Martin owes me nothing. Everything has been paid off for Martin, okay? So now let's move on to August the 15th, okay? August the 15th, Kennedy returned merchandise purchase on August the 6th for $40 plus the sales tax. So we have another return here. So the returns are very similar. We've got the entries here, okay? So what are we going to do for the returns? We're going to debit sales, returns, and allowances, okay? The amount of the return for the August 15 entry is $40, okay? We're also going to give back the taxes. So we're going to go ahead and we're going to debit our sales tax payable, okay? Because we have to give them back the taxes. It's when you go to Walmart, for example, and you buy something and then you go return it. They give you back the amount of the purchase plus any taxes you paid on it. They return you the total of the sale plus the taxes, okay? So let's calculate the taxes on the return of $40. We've got $40. The taxes are 4%. So that's going to be $1.60 in taxes that's going to be returned back to the customer, okay? Now, what are we going to do? Well, Kennedy hasn't paid me either. Remember, Kennedy is right here. Kennedy owes me $218.40. So what I'm going to do is I'm going to reduce the balance that Kennedy owes me with this return. So when Kennedy purchased from us an account, we debited the accounts receivable. Now that he made a return, his balance needs to decrease because he doesn't owe me the full amount. I'm going to go ahead and I'm going to credit my accounts receivable for Kennedy. So the amount that I'm going to credit is the amount of the return plus the taxes. That will be $41.60. Okay, that will be adjusted to the $218.40. So if Kennedy owed me to 1840. Now I've made this adjustment for the return. I've given him credit for 4160. Okay. Kennedy now only owes me 176.80 as of this point in time. Okay. So that happened on the 15th. Okay. On the 20th. Okay. On the 20th, Kennedy paid the balance due. Now, if we remember for Martin had a discount. Okay. Kennedy has no discount, so it doesn't matter when he pays. He owes what he owes. Okay. So we are going to first calculate the amount for the receivable. Okay. So how much money does Kennedy owe me? Okay, Kennedy's not getting a discount if he pays on time. So all we have for Kennedy is, let's look at our receivable. Okay, we've got where he purchased on account for 218.40, and then Kennedy had a return. Oh, and I highlighted the wrong one. Sorry. Kennedy down here had a return of 4160. Okay, so the amount that Kennedy owes me is 176.80. Okay, we have to clear the receivable. Now the balance on the account for the accounts receivable is a debit. If I want to zero it out, that means I need to credit my accounts receivable. Okay, so the balance due is $176.80. Okay, so we're going to go ahead and we're going to credit 176.80. Now Kennedy is paying us what he owes us. How does Kennedy pay us? Kennedy pays us with cash. The amount of cash that we received is the total balance due of 176.80. Okay, and then received cash on account. Okay, so in this particular scenario for Kennedy, all we had to do is figure out the balance on the receivable. That is what Kennedy owes me. There is no discounts being offered. If there was a discount, you would have to look at the original entry and see if there are any discount terms. Martin had discount terms. Kennedy did not have any discount terms. So that is why we didn't take it into consideration down here. Okay, so these are the entries for exercise 10.5. All of the calculations have been covered in detail with you. Please make sure that you refer to your figure 10.7, accounting for merchandise sales transactions, as you are working on all of the journal entries for this chapter. This is going to be a big help to you. Okay, please ensure that you complete your weekly assignments. Refer to your course syllabus. All of the due dates are clearly outlined. If you have any questions or concerns, do not hesitate to contact me or visit me during my scheduled office hours. Okay, I'm here to assist you. Just go ahead and reach out. Make sure that you please read before you work on any of your homework. 2 attempts are provided and the highest grade is retained. Okay, the more you practice, the better you're going to get at it. Okay, that is it for this lecture. Until next time, have a wonderful rest of your day. Bye-bye.